Trading tactics when we identify the trend, uptrend or downtrend and the level support or resistance. And we find a pin bar near these levels in line with the direction of the trend. The second step is to know how to enter the market based on this candlestick pattern. According to my experience, there are different entry options when it comes to trading pin bars. It all depends on the candle anatomy, the market conditions, and your money management strategy. 1. The aggressive entry option. This method consists of entering the market immediately after the pin bar closes without waiting for a confirmation. This strategy will help you catch the move from the beginning, because sometimes the price goes higher after the close of the pin bar, and if you are not in the market, the trade will leave without you. See the example below. The chart above shows how an aggressive entry could help you to execute your trade in the right time without being left by the market. And as you see, we took this trade because we had 3 important elements. The trend, the market was trending down, in this case we look for selling opportunities. The level, in this chart we had a support level that becomes resistance. The signal, a clear pin bar was formed after the retracement back to the resistance level. When you have these 3 elements in the market, you just place your trade after the close of the pin bar, and your stop loss above the long tail. Your profit target will be the next support level in case of a downtrend. These 3 elements are quite enough for you to find high probability entries in the market. The conservative entry option. This strategy consists of entering the market after 50% of the range bar retracement. This strategy sometimes will work and it gives you more than 5:1 risk-reward ratio, and sometimes the market will leave without you. See the illustration below. The illustration above gives us an idea about the power of conservative entries. As you can see, this entry method helps us decrease our risks and increase our rewards. The trade above has more than 5:1 risk-reward ratio. One trade like this every month is quite enough to generate a decent income. See another chart below. One of the drawbacks of this entry option is that the market sometimes doesn't retrace to 50% of the range bar, which will make you feel frustrated because the market will move to the profit target without you. There is no wrong or right entry option, they both work great, but with screen time and experience, you will be able to decide whether to trade aggressively or conservatively. Trading pin bars with confluence. Confluence happens when many technical indicators generate the same signal. This trading concept is used by price action traders to filter their entry points and spot high probability signals in the market. It doesn't matter if you are beginner or advanced trader, trading with confluence is a must, because it will help you focus on quality setups rather than quantity, and it will enhance tremendously your trading performance. Confluence means combination or conjunction. It is a situation in which 2 or more things join or come together. For example, if we are looking for a pin bar signal, we need to find other factors of confluence to confirm our entry. We are not going to take any pin bar that we find on our chart. Factors of confluence. The trend. It is one of the most important factor of confluence. This is the first thing that most successful traders look for on their charts. You can't trade any setup without identifying if it is in line with the direction of the market or not. A bearish pin bar in a downtrend is more powerful signal than the one in a range-bound market. Support and resistance levels and supply and demand areas. These major levels have a significant importance in the market because all big participants watch these specific areas. Moving averages. I personally use the 8 and 21 moving average. This technical trading tool acts as dynamic support and resistance, and it is a very important factor of confluence in trending markets. Fibonacci retracement tool. I use the 61% and 50% Fibonacci retracement to find the most powerful areas in the market. Lines. Drawing these lines on your charts give us an idea about the market direction and help us find the most important reversal points in the market. When you are analyzing your chart, you are not obligated to find all these levels to determine whether the trade is valid or not. If you can find just 1 or 2 factors of confluence that come up together with a good pin bar setup, this is quite enough to make a profitable trade. For example, an obvious pin bar signal near support or resistance level in line with the direction of the market. See the illustration below. In the example above, we have a high probability setup with 4 factors of confluence. 1. The trend. The market is trading up, which means that we have to follow the trend and look for a buying opportunity. 2. The level. The support level is an important key level in the market. As you can see, price broke out of the resistance level that becomes support and pulled back to it. 3. The signal, the formation of the bullish pin bar after the retracement back to the resistance level that becomes support. 4. Another signal, the rejection of the pin bar from the support level, and the 21 moving average that acted as a dynamic support level. All these factors work together to give us powerful trading signal to buy the market. See another example. The example below shows 4 confluent levels that indicate a powerful trading signal. The first factor is the bullish trend, and the second one is the resistance level that becomes support. The third one is the 21 moving average that acts as a dynamic support level, and the last factor is the pin bar formation near these levels in line with the bullish trend. If you adopt this trading concept, you will completely change the way you perceive the market, and you will start trading like a sniper by waiting for the best trading setups to come to you, instead of trying hard to make trades happen.